I warned you that August could be ugly. And sure enough, the S&P 500 and NASDAQ have been down for 3 straight weeks. At the beginning of the month, we brought on the legendary market historian Larry Williams as part of Chart Week. And he urged patience, remember letter P? Because his near-term outlook was pretty negative. He figured you'd get better buying opportunities if you waited. Unfortunately, I think we could have more pain in store for us before the selling ends, especially with Jay Powell's speech in Jackson Hole coming in Friday. Last year, that killed us. Given how strong the economy's been lately, oh my God, I wouldn't be surprised if Powell lowers the boom on us again to truly smash inflation. But you know what? We've had a pretty harsh decline here. The market's very oversold. Funny thing about stocks, they do get cheaper as they go down. That's why all week I want to highlight my favorite names that have come in the most in August, searching for buying opportunities. Now, there are 82 names in the S&P 500 that are down more than 10% for the month. We searched that list for potential buying opportunities, and I'll be telling you the results for the rest of the week. Tonight, I want to start with Etsy, Johnson Controls, On Semiconductor, Wynn Resorts, and Ventas. Etsy is the third worst performer in the S&P this month so far, down nearly 28%. The online platform for handcrafted items has been obliterated. But I feel comfortable sticking my neck out here because we just spoke to the CEO on August 3rd and got the sense that Etsy's business is doing just fine, thank you. The problem here is that the stock's in an uncomfortable place, not growing fast enough to be a growth stock, not cheap enough to be a value stock. That is a common dilemma. Why do I like it then? Because Etsy did something surprising. Even as the pandemic receded, they retained their active buyers and sellers. In fact, active buyers hit a new record this quarter. Their gross merchandise sales were positive in May, June, and July. Most importantly, when all is said and done, I think Etsy will be one of the top e-commerce platform survivors remaining, one that can grow steadily and profitably into the future. Plus, after the recent sell-off, the stock's trading at less than 27 times earnings. Now, look, that's not unreasonable given the fact that Etsy's expected to grow earnings at a 15% clip next year. That's fast. I'm cautiously optimistic on this one going to the holidays, too. All the more reason to buy it into weakness. Just remember to buy gradually on the way down because all these August losers could go lower before they go higher. Next up, many industrials have sold off hard this month, including Johnson Controls, which makes building products, including HVAC equipment and safety gear. Now, this stock's down 15% for August. Wow. Now, some of that's because the sickles went out of style this month, but a lot of it's because Wall Street didn't love the results when Johnson Controls reported back on August 2nd. That quarter wasn't perfect, but it certainly wasn't horrible. Johnson Controls missed revenue expectations slightly, 9% organic growth. The street was looking for 9.9%. Big deal. And they only matched the earnings expectations. They didn't blow them away. Meanwhile, management's guidance for the next quarter was a bit light. They also cut their full-year organic sales forecast ever so slightly. There. Now you got all the bad news. Does that justify 16% pullback in Johnson Controls stocks since the quarter? I see a company that's participating in the construction boom that's coming with the rise of reshoring. They're going to win on that. Whose earnings are expected to grow from $3 per share last year to $3.55 per share this year and to $4 next year. What more could you want? Stock now trades at less than 15 times next year's numbers. Bargain. I think Johnson Controls looks pretty juicy at these levels. No, it isn't doing as well as Carrier Train Tech, but that doesn't justify this kind of weakness. It reminds me of the stocks I highlighted at the top of the show. Oh, then there's one old favorite of the show, On Semiconductor. This is a terrific company that's been hit hard. The stock's down 14%. Wait a second. I mean, Wall Street doesn't like that this company sells tons of chips to the auto and industrial end markets. I think the sell-off here, though, is absurd. To put it simply, On Semiconductor reported a magnificent quarter at the end of July. I loved it. Clean top and bottom line beat, with management giving us tremendous guidance for the next quarter. But they sell to the automakers, and everyone's terrified of a possible strike by the UAW. Remember, September 14th, the drop dead there, hence the sell-off. I think this one's worth the risk, though. What else? Well, many of the gambling stocks that made our August losers list include Wynn Resorts. Now, this is a stock we own for the Charitable Trust. It's down almost 14% north to date. I mean, this is unbelievable. As best as I can tell, the negativity here is related to concerns about China, which are not illegitimate, given that Wynn has 2 large casinos in Macau. In normal times, they make up the bulk of the business. However, you've got to remember, Macau had almost no activity last year thanks to China's draconian COVID policy. Case in point, in July, Macau gaming revenue was up more than 4,000% year over year. And just about a week ago, we learned that Macau had the most daily visitors since the onset of the COVID-19 pandemic. So maybe the economic woes in the mainland China will hurt Wynn's Macau business. But honestly, how much worse could it get after multiple years of pandemic lockdowns? So far, the numbers show that Macau's bouncing back. Don't forget, China has the same long on money, short on time zeitgeist as everyone else. If anything, they might be even more eager to travel because their government's restrictions were so much more onerous than everybody else's. Rather than try to get ahead of something that may or may not happen halfway across the world, I prefer to focus on actual information, like the second quarter results that Wynn reported a week and a half ago. The numbers were just plain out excellent, okay? With a comfortable revenue beat and, by the way, a huge earnings beat. They made 91 cents per share when Wall Street was only looking for 64 cents. Every Wynn property, the two in Macau, plus Wynn Las Vegas, Wynn Encore in Boston, they beat expectations, and most did so by a wide margin. Now, you got to have some faith here that the Macau part of the story won't totally unravel. But with the stock down so much and the fact that you're now getting that last quarter for free, I think it's a great entry position. Finally, the real estate investment trusts have been obliterated this month. Thanks to the rising interest rates, I like Ventas, which is mainly focused on senior living facilities. Remember Deb Cafaro, she's come on a lot, along with medical offices, outpatient facilities, and research properties. I know higher rates will weigh on this dividend stock, like they always do. But I think the long-term opportunities here are immense because the demographics are on Ventas's side, as members of my generation get sent to senior living facilities over the next decade or two. Ventas's latest quarter was basically in line, but the stock's been hammered anyway, to the point where it now gives you a 4.3% yield. 4.3 is okay. I think you use this bout of weakness to buy it gradually on the way down. You can afford to be patient here because they're paying it away. So bottom line, we've been cautious, we've been right. We've been patient, that's been right. But sometimes things get out of control on the downside. And I think when you take a look at Etsy, Johnson Controls, On Semiconductor, Wynn Resorts, and Ventas, some of these are very good companies, and they've been crushed. Stay tuned for the rest of the week. You want more of these beaten down ideas of August. Mad Money is back after the break.
Coming up, with a suite of sit-down casual favorites, is this stock ready to bloom? Start stacking those onions. Mad Money will be right back.